Robert Kiyosaki is a well-known author of the best-selling book Rich Dad, Poor Dad, and a personal finance and entrepreneurship speaker. After the recent influx of layoffs at big companies like Google, Microsoft, Amazon, and Facebook, the author alerted investors that a significant market crash was imminent. Therefore, it's vital to continue watching this video. By the end, you'll comprehensively understand Kiyosaki's warning while learning the critical measures he recommends to secure your financial future. Robert has been known to issue precautionary alerts about a potential market crash for several years now, as he believes the current economic situation is unstable and a crash is inevitable. However, in 2023, he escalated his predictions on the looming negative future of the global economy.
Especially today, because look, we're crashing, like it or not. The question is, how will you survive it?
I want to say is this: it's the biggest opportunity in the history of the world. This crash is going to be so big. And look at that red board again. I don't think any more quantitative easing can start it. Even if they solve the coronavirus crisis, it's still going to crash.
Yeah.
By asking his subscribers at the end of January, what is more severe than a Great Depression, Kiyosaki increased the frequency of his warnings in 2023 by responding, a global recession. On February 10th, 2023, he tweeted, "Crash is here. The first dominoes in Silicon Valley fall in 2022, laying off 144,000 people and 66,000 extra people by 2023. The writer explained that Stansberry Research was foreseeing a Valentine's Day massacre, so he warned investors that everything will drop, including the values of gold, silver, and Bitcoin. Although the global recession is regrettable, be patient despite the crashing world economy. Sad news. There will be rising rates of bankruptcy, unemployment, and homelessness. But I have good news. There are plenty of bargains in gold, silver, and Bitcoin." Kiyosaki cited the increasing prices of gold, silver, and Bitcoin as proof that the financial situation in the United States is deteriorating, claiming that their prices are increasing because Americans poor and middle class are struggling to make ends meet and falling deeper in bad debt. However, Kiyosaki asked his 2.4 million followers on Twitter not to panic because this is actually excellent news. With just $30, one can start the journey of becoming richer by buying at least a single silver coin, he continued, pleading with his followers to avoid becoming poorer.
The reason I call it God's money is you can't fake it. You know, you can fake it with a fake ETF, like a gold ETF or a silver, which I don't touch because it smells as bad as the guys that printed that crap. You know what I mean? Jesus. But this is real money. So you look at this here. When I first started buying that was $1.40.
Yeah.
Today, that's $16.
He also said that he planned to purchase more gold, silver, and Bitcoin, which he considers real money, using false money, the paper currency. After the approaching plunge, according to the author of Rich Dad, Poor Dad, the Federal Reserve will have to print billions of currencies to support markets, increasing the country's debt and depreciating the dollar's value. Factors that may contribute to a global recession. According to Robert, these 6 factors pose a high economic threat and likely lead to a global recession. First factor, debt. Kiyosaki believes that excessive debt is one of the economy's biggest problems. He argues that individuals and governments have taken on too much debt, creating a fragile financial system vulnerable to collapse. Debt can lead to an economic recession when individuals, companies, or governments cannot service their debts. This action can cause a chain reaction that leads to reduced spending, decreased economic activity, and eventually a recession. For example, if many individuals or companies cannot repay their loans, banks and other financial institutions may face significant losses. It can lead to a credit crunch, where banks become more hesitant to lend money, making it difficult for businesses and individuals to access credit. If this situation becomes widespread across multiple countries, it can lead to a global economic recession, as happened in the 2008 financial crisis. On a personal level, Kiyosaki advises people to reduce their debt levels and build up their cash reserves. He also believes that having cash on hand will allow people to take advantage of opportunities that arise during a market crash. Second factor, inflation. Inflation is a sustained increase in the general price level of goods and services in an economy over time. It's often a result of an increase in the money supply, a decrease in the supply of goods and services, or an increase in demand.
Thank you for sharing
And
your time with me.
inflation makes life harder.
That's right.
On the working class. You see, when Biden shut down the XL pipeline, what that did was create inflation. The first thing they do is increase the price of oil. When you increase the price of oil, you cause inflation. And when you cause inflation, thank you, Jesus, but I get richer. The rich get richer with inflation.
The author is concerned about the impact of inflation on the economy. If the current global inflation rate continues to rise, it will have significant negative economic consequences. He believes that the current policies of central banks, including low interest rates and quantitative easing, are leading to higher inflation, which may erode the value of people's savings and investments. For example, it can erode the purchasing power of consumers, reduce investment, and lead to higher interest rates. It can also cause uncertainty and instability in financial markets, leading to a recession. Third factor, economic imbalances. Kiyosaki is also concerned about the growing gap between the rich and the poor. These can arise when an unequal distribution of resources or wealth within an economy leads to instability and insecurity for some groups. He argues that the current economic system favors the wealthy, leading to social and economic instability. When wealth is concentrated in the hands of a few, it can lead to decreased consumer spending as most people have less money to spend. This factor will lead to decreased demand for goods and services, which can, in turn, lead to lower profits for businesses and ultimately a recession. In addition, income inequality can contribute to a lack of social mobility, as those in lower income brackets have less access to education and opportunities to advance. Therefore, an economic imbalance will significantly lead to decreased productivity and innovation in the long run, negatively affecting the global economy. Fourth factor, external shocks. These can include pandemics, natural disasters, geopolitical events, or other unexpected changes that disrupt supply chains and impact the economy. For example, the COVID-19 pandemic has significantly impacted the global economy since its outbreak in early 2020. Many countries implemented lockdown measures to slow the spread of the virus, resulting in the closure of businesses, reduced consumer spending, and increased unemployment rates.
The coronavirus and the coming crash, financial collapse possibly, marks the end of the industrial age and the beginning of the information age. It's a very big move. And the people that are in trouble today are people still stuck in industrial age thoughts.
Furthermore, it disrupted global supply chains, and the international travel restrictions severely impacted the tourism industry. The pandemic also highlighted existing economic inequalities and weaknesses in healthcare systems worldwide. Although most countries have lifted these measures, the global economy has yet to recover from the pandemic's economic effects fully. On the other hand, geopolitical events, such as trade wars or conflicts between nations, can also significantly impact the global economy. For instance, the ongoing conflict between Russia and Ukraine is causing economic disruptions in those countries and other parts of the world. The war is a major factor causing the ever-increasing global oil prices, as Ukraine is a major transit route for Russian gas exports to Europe. The current USA and Europe sanctions on Russian oil and the disruptions to the flow of energy are also causing a significant shortage of the product, hence driving up the commodities prices. Therefore, these events can disrupt global trade and cause uncertainty, leading to reduced investment and slower economic growth. Fifth factor, policy failures. Poorly designed economic policies, corruption, or ineffective implementation of policies can also lead to economic problems. Policy failures can occur at various levels of government, from local and national to international. They can take many forms, such as inadequate regulation of financial markets, fiscal mismanagement, ineffective trade policies, or insufficient investment in infrastructure and education. When these failures persist or worsen over time, they can lead to economic instability, inequality, and recession. In the short term, policy failures can create uncertainty and discourage investment, leading to a contraction of economic activity. In the long term, they can contribute to structural weaknesses in the economy, such as low productivity, limited innovation, and unequal distribution of income and wealth. These weaknesses can make the economy more vulnerable to external shocks, such as a global pandemic or a sudden change in the geopolitical landscape. Sixth factor, lack of adequate financial literacy. Kiyosaki believes that many people struggle because they lack the basic education to make good financial decisions. Financial education is important because it enables individuals to make informed decisions about their money, investments, and savings.
I want to talk to you about the most important subject for all of us today, rich, young, poor, or old. It's called financial education. And as you know, our school systems teach us nothing about money. Nothing. It's pathetic. You know, they have financial literacy courses today. Well, that's not financial education. You know, it's really pathetic.
He argues that the education system needs to teach people about money and personal finance. On a larger scale, a lack of financial education can also contribute to systemic economic problems. For example, suppose a significant portion of the population is in debt and unable to repay their loans. In that case, this can impact banks, financial institutions, and the overall economy. Moreover, a lack of financial literacy can contribute to market volatility, as investors may make uninformed decisions based on emotion rather than sound financial principles. Here are 4 key recommendations by Robert Kiyosaki. Market crashes or economic downturns are a part of the natural cycle of the economy. While it is difficult to predict when a market crash will occur, it is important to understand how it can impact one's financial situation and take steps to protect oneself. Since preparing financially and being safe from an economic crash requires a combination of practical steps and a long-term mindset, below are 4 effective suggestions from Robert Kiyosaki that can help you prepare for such an occurrence. First strategy, build up an emergency fund. Kiyosaki recommends having a cash reserve covering at least 6 months of living expenses. It will provide a safety net in case of job loss or other financial difficulties. Therefore, you must create a plan for what you would do in the event of a financial crisis. It could include steps such as reducing expenses, finding alternative sources of income, and downsizing. Building an emergency fund is important in preparing for an economic recession. It can provide a financial cushion, reduce stress, allow you to take advantage of opportunities, and help you avoid debt. Second strategy, diversify your investments. Kiyosaki advises spreading your investments across different asset classes such as stocks, bonds, real estate, and commodities. It will help you to minimize your exposure to a single sector that may be hit hard during an economic downturn. The author believes in investing in assets that generate a passive cash flow, such as rental properties or dividend-paying stocks. It will provide a steady income stream even if the economy crashes. Third strategy, focus on financial literacy. Kiyosaki stresses the importance of financial education, particularly in investing and entrepreneurship. By learning how to manage money and generate income, you'll be better equipped to navigate economic ups and downs. Therefore, keeping yourself updated on economic news and trends is essential. Follow reputable sources of information to understand how the economy is performing and what changes are being made. It's also vital to consider professional advice, such as consulting a financial advisor to get an expert opinion on protecting your investments and preparing for an economic downturn. The author believes financial education is critical in helping people protect their assets and achieve financial independence. Fourth strategy, be prepared to take advantage of available opportunities. Kiyosaki advises being ready to take advantage of investment opportunities that may arise during an economic downturn. It may involve having cash and the knowledge and skills needed to make informed investment decisions. Overall, Kiyosaki's approach emphasizes the importance of being proactive and prepared rather than simply reacting to economic events as they happen. By building up your financial resilience and staying informed about economic trends, you can protect yourself from the negative impacts of economic crashes. Lastly, overall, Kiyosaki's warning is a reminder that market crashes can and do happen, and that it's important to prepare oneself for the possibility of one occurring. By investing in tangible assets, reducing debt, and building up cash reserves, people can protect themselves from the effects of a market crash and benefit from it. I'll continue to share more valuable information to help you attain your financial objectives in my next videos. Therefore, it's vital that you subscribe to my channel, and hit the notification bell to be alerted as soon as I upload them.